Welcome to this week's look at the state of the New York City real estate market. This is for the week of March 4th to March 10th. Going to get started in a moment with the luxury market. Then I'm going to move on, take a look at what happened in Manhattan and Brooklyn last week. Then I'm going to wrap it up, give you my thoughts and my takeaways and my recommendations for buyers and sellers who are active in this market, or perhaps people who are just thinking about buying or selling in this market. Okay, any questions? Please remember to just post those below. You can always also reach out to me directly at Sotheby's. We're going to get started now with the luxury market. There were 28 contracts signed in the luxury market. These are properties that are priced at $4 million and above. 4 of those were for the trophy properties, meaning properties that are priced at $10 million and above. Condos, as per usual, outsold pretty much everything else. The 20 condos went into contract, for co-ops and 4 townhouses went into contract last week. 15 were uptown and 13 were downtown. The number one contract last week was apartment 29B at 1 West End Avenue. It was asking $17,950,000. It was reduced from $19,500,000. And it should be noted, it was the last sponsor unit sold in the building. This building started marketing back in the second half of 2015 when they began to market off of just floor plans. This is a duplex condo. It has a little over 5,300 square feet. It includes 4 bedrooms, 5.5 bathrooms. It has a 33-foot great room with a double height living room that opens onto an almost 3,300 square foot terrace. This is a 245 unit condo building. It has doorman, concierge, and a garage. It also has 35,000 square feet of amenities, including a 75-foot swimming pool, fitness center, and spa, terraces with cabanas, children's playroom, media, billiards, and game rooms, and storage. The number 2 contract was 50W at 50 West 66th Street. It was asking just under $18 million. It is a 2,816 square foot condo. It has 3 bedrooms, 3.5 bathrooms. It has a 24 by 22 foot great room that faces Central Park. It opens onto a 139 square foot loggia. The amenities in this 122 unit condo include doorman, fitness center, indoor lap pool, and an outdoor saltwater pool, plus a jacuzzi, basketball and pickleball courts, screening room, game room, bike room, and my favorite, dog washing facility. Closings in this new condo, as I have previously mentioned, because we have had other contracts talked about in this building previously, back in 2023, are expected to happen sometime this year. So I'm sure that will be very exciting to those buyers who've been waiting now for a while to close on their new homes. Okay, that's it for the number 1 and number 2 contracts for last week in the luxury market. We're going to take a look now at the stats for last week. The total weekly asking price sales volume, 197,210,985. Average asking price, $7,043,249. Median asking price, $6,200,000. Average discount from original ask to last asking price, 8%. Average days on the market, 641. That's it for the luxury market report for last week. Any questions, post them below. Reach out to me at Sotheby's. We're going to move on now, take a look at what happened last week in Manhattan and Brooklyn. As I mentioned, I'm going to be wrapping this up, giving you my thoughts and takeaways, my recommendations to buyers and sellers. This market has changed a lot since last year, and it is continuing to change, especially if you are an active buyer or seller in this market. You're going to want to stick around for that. If you don't want to wait and stick around, you can just fast forward to the end, but you might find the rest of this report interesting. So we're going to move on now, take a look at what happened in Manhattan. Last week, we saw a drop in supply. 422 properties came on the market in Manhattan, down almost 9%. Contracts signed up just a smidge, 206, under 1%. Off-market rose 177 properties for the week, up a little over 21%. If we step back and look at the month in Manhattan, the supply 1,540, that's up almost 30%. Contracts signed 842, that's up a little over 5%. And the off-market properties 524, up a little over 30%. The market pulse is showing us that it is remaining in this kind of neutral, balanced market, a little bit up and down at the end here, but essentially kind of hovering between the buyers and the sellers market. That is a reflection of the balance between the supply and the demand. We're down a little bit, 3.6% over the last month, but we're up 12.5% from last year. If we look at the liquidity pace chart, this 30-day moving window of contract activity, 842, that is up 8.9% from last month, down 16.7% from last year. You can see at the very end, we're down a little bit. We did have a big rush of activity at the beginning of this year. As we're kind of moving through this 30-day cycle, you can see that, we're kind of dropping off a little bit. We would expect to see more activity in the contract and the supply. Let's see what happens with that. This climate index is a very good chart, I think, for both buyers and sellers. It is really a reflection of what kind of listing environment we are in. And so for sellers, you can see that we are somewhere in between an easy market and a challenging market. This is good news for you. This is the best market we have seen in a very long time, since last spring, actually. So this is a good time to be getting yourself on the market. If this continues, this will be a much better market for you than it was last year, especially in Q3 and Q4. We have a little bit of a sneak peek here of the Q1 numbers, and as we're heading into the last month of the first quarter, we can see that from the sale numbers that the bottom, as I have previously mentioned, may have already formed. Looks like, going back and looking at the data, that the real bottom of our market probably happened sometime in October, November. Those were really difficult months, and the worst seems to be behind us. If we break down the sales, making up the Q1 numbers, we see that the vast majority of the deals were signed last fall, which is interesting for those who are interested in data like me. That is it for the Manhattan market for last week. We're going to shift now. Take a look at what happened in Brooklyn. The supply in Brooklyn last week improved. 221 for the week. That is up almost 17%. Contracts signed up 22%, 150. Off-market down a little over 16 at 73. That is a nice little pop for Brooklyn. Maybe we are starting to see signs of life there. If we look at the supply for the month, we see the supply at 742. That is up 8%. Contracts signed 509, up a little over 8%. Off-market up a little over 29%, 266. The market pulse in Brooklyn is up from last month, over 68%. It is also up from last year, over 76%. We are definitely moving through that kind of neutral, balanced market. Looks like we are trending upward, a little more into the seller's market. This chart is definitely showing signs of life. Are we seeing Brooklyn kind of coming to life now, whereas we were not before? Perhaps. Let's keep an eye on this. This liquidity pace chart in Brooklyn showing this 30-day moving window of contract activity, 509, up almost 12% from last month, down a little over 7% from last year. But you can see from the end of this chart, it is trending upward. Looks like Brooklyn is It has a little more life to it than Manhattan. Definitely, the numbers are proving that out. So you can see from this climate index, this is rising closer to this easier market for sellers. So again, sellers in Brooklyn or people who are thinking, homeowners who are thinking about selling in Brooklyn, this is really a good time for you to be getting off the fence. If you are on the fence, you might want to think about listing your property. Okay, so that's it for Brooklyn. We're going to move on now. We're going to wrap this all up. I'm going to give you my thoughts, definitely my recommendations if you're an active buyer or seller in either Manhattan or Brooklyn. Whether you're just in the regular market or the luxury market, you're going to want to stick around for that. Any questions? Please remember to just post those below. You can always also reach out to me directly at Sotheby's. There were 28 contracts signed in the luxury market. 4 of those were for the trophy properties priced at $10 million and above. 20 were condos, 4 were co-ops, 4 were townhouses, 15 were uptown, and 13 were downtown. We saw some differences between the Manhattan market and the Brooklyn market. In terms of the supply, we saw that in Manhattan for the week, the supply was down 9%. In Brooklyn, we saw the supply rose 17%. Contracts signed, we saw not such a great showing on that, up about 1%, whereas in Brooklyn, contract activity was up 22% for the week. So we talked about the climate index, that the sales number suggest that the bottom may well have formed. Looks like we kind of hit that bottom back in October, November, and we're kind of regrouping and moving on now into this new year, new market, which right now feels kind of neutral and balanced, although it does seem to be shifting a little bit in Brooklyn, looking like it could be starting to move in favor of the sellers. But it is probably a little too soon to call this because we still have weeks to go of this spring market, and there's more to be revealed. What does this all mean? If you are a seller, these are your best market conditions since last spring. You can see from the market pulse, from all the indicators, this is a good time for you to be getting on the market and making the most of it. Historically, you've heard me say March is the best time to list. You want the longest runway possible. March, April, May. Maybe we'll go into June a little bit. Hard to say. If we have those delayed, if the mortgage interest rates get delayed a little bit in terms of their adjustments downward, then yeah, maybe buyers are going to want to hold off on some decisions. It's very hard to say what they're going to want to do about that, but if the rates don't adjust until a little bit later, they may want to wait, which may delay our season. So yeah, we could go into June a little bit, but you'd want to get on the market now. Buyers are out there now. So this is a good time to get on the market. Be sure to be realistic about your asking price. And remember that the asking price is not the selling price. It is a strategy intended to position you as best in class and get buyers excited about coming to see your property and making offers. There is likely more inventory coming, very likely more inventory coming. So expect that you will have competition. So you want to get out there, be the best thing out there at the most compelling price possible and get your deal done. Days on the market matter. Sooner you get your deal done, the better. Buyers, mortgage rates did fall a bit this week. This is the lowest average since early February. Hard to know how much the rates will actually adjust this year. I'm not a mortgage person. I'm not going to wax poetic on mortgage rates right now, but I will say that, if you see something you like and the rates work for you, I don't know how long you want to really wait around for rates to adjust. You should probably consult with your mortgage advisor on that. Right now, they have adjusted a little bit, and that much I can report to you. There is more inventory coming. If you don't see something that you like, you can keep your eye on the inventory and see if there's something that you do like that comes along. Expect more buy-side competition. Your window of real opportunity is likely behind you. As I said, the worst of it is seems to be behind us. You may still have some leverage, though, with properties that have been on the market for a while. Those sellers may be ready to start having conversations with buyers that they hadn't been ready to have previously. Okay, that's it. If you have any questions, please reach out to me at Sotheby's, or you can post them below. As always, my thanks to Urban Digs and to the Olshan Luxury Report. The work they do helps me to help you to make great decisions. I'll be back next week with the very latest news on what's happening in the New York City real estate market. In the meantime, take care.